Okay, so I'm gonna jump into sharing the screen with you, go right into the notes. All right, so today we're gonna be working on depreciation, and so I'm gonna do some examples for double declining balance and units of production use for depreciation of long-term assets. And so starting off with 6.5 and 6.6, the first one talks about statement of cash flows. And remember, first of all, that depreciation is never cash and rarely matches the flow of payments. So the company paid $400,000 cash for a computer, has a 5-year useful life, after which it'll be worthless. So 0 salvage value. And they're asking, what should Ace Electronics report on the statement of cash flows for December 31st, 2011? And so really, we know it's cash paid. We know depreciation, never cash. So we have to figure out, is it operating activities, investing activities, or financing activities? And it's investing activities, because investing activities are where we report purchases of long-term assets. Okay. Now, it's asking, how much depreciation expense should Ace Electronics record for the year December 31st, 2013? So note, our original purchase was on January 1st, 2011. We paid $400,000. It's going to be worthless at the end, and it has a 5-year useful life. So our formula for double declining balance, I'm going to scroll down a little bit here. No, here comes trouble. You behave, no barking. Two times the straight line depreciation percentage times the book value. And I kind of threw in the straight line depreciation percentage, but I didn't really talk about how to calculate it. And so if you think of anything as 100%, what you have to do is divide by the useful life to get the straight line percent. So in this case, 100% divided by 5 years equals 20% per year. So our formula would be 2 times 20% times the book value. So I'm going to create a little table here so that hopefully it will help us follow along. And so for the first year, 2011, 2012, 2013, and then we have the 2 times straight line percent, which is equal to 2 times 20%, which equals 40%. Then we have the book value. And the last column is our depreciation expense. So let me go ahead and set these to center. And we have 40%, the book value 400,000, and so the depreciation expense 160,000. Hey, I thought we had to talk. You behave. Listens like my children. 40% now of our new book value. $400,000 minus the 160,000 equals 240,000. So we multiply 40% times 240,000. And that's 96,000. And so now we're at 2013. We have 40%, 240,000 minus the 96,000 equals 144,000. And so now 40% times 144,000 is 57,600. And I see a question in the chat, so I will get to that before I even ask. Where did I get the 160,000? So that is 40% multiplied by the book value, and that equals the 160,000. Okay. Any questions? Can always give a thumbs up if you're good. We'll move on to the next one. Okay. I'm going to go ahead and insert a page break so I can see it. And then scroll down a little bit. Okay, so now we're on number 7. And what I want you to do is just calculate 2011 depreciation expense. And when you're done, yes, I'm sorry, the answer was A there. So on 6-7, calculate the depreciation expense using the straight line method. It's the same for all 4 of the years, so you don't have to fill that out. Just do part 1 All you have to do is do 1 year. And just in the chat, send me your answer. Don't send it out to everybody, just send it to me privately. Give you another minute. Okay, so let's take a look at the straight line method. So we have I'm gonna bold it, give me 1 second. So we have 600,000 minus 22,500. And that's gonna be divided by 4. And so that's gonna equal 144,375. So if we were to put that in the table, the depreciation expense for each year would be 144,375. It didn't ask for this, but if we wanted to add a new column to the right, call that book value, it would essentially take the 600,000 and at the end 22,500, 600,000 minus the 144,455, 625, I think. And then each year you would subtract the 144,000 from that, and eventually you would get the 22,500. Okay. All right, I'm going to launch that poll. If you don't have any questions, click on the no. If you do, click yes. And if you click yes, please click or please type it. Okay. Okay, I'm going to go ahead and end that poll. I'll share the results. All right, and then I'm going to close it. And somebody asked where I get the 455, 625. So that would be the 600,000 minus the depreciation expense of 144, 375. Hopefully, not sure my math added up, but I should be in the neighborhood there. Okay. All right, so now double declining balance. We have 2 times the straight line percent, which is equal to 2 times 100% divided by 4, which equals 2 times 25%, which equals 50%. We multiply that by 600,000, which is our book value, and we get 300,000 for our first year. Moving on to our second year, we have 50% times our book value, which is the 600,000. Zozo, no, come here. Right now, come here. Up here, say hello. Say I'm sorry. Yeah, that's right. You're not really sorry, are you? All right, wave to everybody. I'm gonna go back to barking at the window. All right, 600,000 minus the 300,000 to get our book value. And so we end up with 150,000 for depreciation expense for year 2. For 2013, 50% times our book value, 300,000 minus the 150,000, and that equals 75,000. Now the last year, we would normally take the 50% and multiply it through, but it's not going to give us the full number. So now we have to take our book value and subtract out our salvage value. So our book value is 75,000. Minus 22,500, and so our depreciation expense is 52,500. Okay, so I had a question in this one of why did I do the 300,000 minus the 150,000? So this would give us a book value of 50% times 300,000. And so this is our new book value here. So it comes down here, and that gives us our new book value of 50% times 150,000. Okay. And so there's a question on the last one, I'm assuming, for 2014. It says, why do you do that instead of just repeating the process? Because we don't want to, we only have a 4-year useful life. And at the end of the 4 years, we want to get to a book value of 22,000 or a salvage value. So our book value is 22,500 at the end of the process. So we've gone through these 3 years and we have this book value here of 75,000, but at the end of the year, we want it to be that. So we have to take 52,000 in depreciation expense. So hopefully that answers. Okay. Throw up that poll again. And if anybody has any questions, please type it into the chat. If you hit yes by mistake, you can click on no. Okay. Where did the 22,500 come from? Okay. So I'm going to end that polling. I'll share the results and then answer the question. Okay. So I apologize. Unfortunately, I don't do really well with small screens, but I'll make it a little bit smaller and go back up. So it has a useful life or salvage value, I'm sorry, of 22,500. So that's where the 22,500 came from. Okay. All right. Now we're moving to the last one, and I'm going to insert a row below. Now it says up here that they estimate that the equipment will be available for 275,000 hours. Or excuse me, they estimate the useful life to be 275,000 hours. Now I've done enough of these where I always want to check the math on it. So I have 40,000 plus a 95 gives us 135 plus 80 is 210 plus 60 is 275,000. So it does come out. Now, I could do this as a percentage and calculate 40,000 divided by the 275, 90 by the 275. But the easier way to do it is to take the 600,000. I'm going to expand this out a little bit. And subtract out the salvage value, 22,500. And that equals 577,500, I believe. Let me just check the math on that. Okay, we're good there. All right. And now I'm going to take that 577,000 and divide it by 275,000 to get my cost per hour. And so we got 577,500 divided by 275,000. And that equals $2.1 per hour. Now, if I want to calculate my depreciation rate for each of the years, I'm going to go ahead and multiply 40,000 times 2.1 and calculate out those figures. Times 2.1, and that's going to be equal to 84,000. Okay. So my first year's depreciation expense 40,000, or excuse me, 40,000 times 2.1 equals 84,000. Now it's kind of a pain for me to bounce back and forth, so I'm gonna punch in the calculations, and there we go. All right. Okay. So again, I'm going to throw the poll up there. See if we have any questions. And if you do have any questions, feel free to throw them in the chat. That's okay. Welcome back. All right. Yeah, I'll do that. All right. So I'm going to go ahead and end this poll, and I'll address a couple of the questions that were asked. Try to share the results. All right. Okay, so I'm just going to go back up. This is what we started with for activity here. And what I did was brought those calculations down here. So I did the first one. I'm going to make these a little bigger. I did the first one, 40,000 times 2.1. The next one was 95,000 hours times 2.1, 80,000 times 2.1, and then 60,000 times 2.1. Okay. So did that work? If you have any other questions, type it in the chat. Otherwise, we're going to move on to the next question. Awesome. So somebody had a question asking if they ask for hours used, and really they just have to tell you. So this is kind of the units of production method here, and they could still give it to you, but then ask you, is it the double declining balance or straight line method? So you just have to look and see what method, but in order for units, you're going to need something like machine hours or miles or something along those lines. Okay. Hopefully I answered that question. If I didn't, throw it up there and ask me to explain it again. All right. I'll move on to the next question. Okay. So some background. We use depreciation for tangible assets, which are like property, plant, and equipment, excluding land. Enough. No more. Hey. No more. We're going to use amortization for intangible assets, which are copyright, trademark, and patents are a few of the examples. For tangible assets, we have a couple different methods that we talk about in the book. We have straight line. We have double declining. Sorry, I'm just going to do it on some balance, and units of production are 3 methods. For the amortization for intangible assets, we only use straight line. Now, a couple other differences is that for tangible assets, we create an accumulated depreciation. Remember, it's a contra asset account. Forgot an I in there. All right. And for intangible assets, we only use straight line, and we reduce the book value by amortization. And also remember, amortization is not cash. All right, so they don't affect the cash flow statement. So on January 1, 2011, purchased a patent for $2,000 cash. It doesn't matter whether or not we use a note, a loan, or we pay cash. That's going to be our beginning book value. It has the legal right to manufacture the microchip for the next 20 years. But because of technology, it's only going to last 5 years. And so when you're using straight line, you use the shorter of useful life or the intangible life. So even though this particular patent is going to legally be available for 20 years to them, realistically, the technology is only going to be useful for 5 years. And after that, it's not going to be producing cash. So we're going to use the 5 years. So we have 2 million is equal to 2 million divided by 5, which is equal to 400,000 per year. Okay, so this would be amortization expense of 400,000. Now, I didn't talk about it here, so just a little note. Depletion is used for natural resources like oil, jewels, etc. Okay. All right, and so at the end of the year in our amortization account, or sorry, in our patent account, the book value would be 1.6 million, which is equal to the 2 million minus the 400,000. And then so each year afterwards, so 2012, at the end of the year, it would be 1.2 million. 2013, it would be 800,000. I see a question there, so I'll get to that in 1 second. 2014, 400,000. And then at the end of 2015, it would have 0 book value. So the 1.6 million comes from, you have the $2 million purchase price, which is our beginning book value. Less the 400,000 amortization expense. Okay. All right. Throw that poll up there again. If there are no questions, click on no. If you do have a question, throw it in the chat. By the way, these polls are no way for me to tell whether or not your cat is monitoring my class or you're monitoring it. All right, I'm going to end the poll. And I'll share the results. So no questions there. Move on to the next part. Give me a second here. I must have had a page break in here somewhere I'm not aware of. Gotta love Word. Okay. So we're on to 6.9. So this will be one for you guys to try the first part. And when you get your answer, type it into the chat with me privately. And so it states that they have a copyright at a cost of 160,000 and a patent for 475,000. And they want to know in this first one, what is the effect on the income statement? So essentially here, you need to tell me what is my amortization for those two for that year. And so type your answer privately in the chat. The answers are starting to roll in. So far, looking good. Give it another minute. See if I can get some more responses here. So far, they're all pretty good. Only one that I see is an error so far. So I only got about 9 minutes left of your time. Want to go ahead and finish this one up and maybe get to the next one. So how would it affect the income statement? So we're going to take the 160, the copyright. We're going to take the 160,000 and we're going to divide it by 25 years. And that's going to be equal to 6,400 amortization per year. The patent was 475,000 and that had a useful life of 19 years. And so that is 25,000 of amortization per year. And so if you combine them, the effect on the income statement is equal to 31,400 of amortization expense. All right, keep in mind, no effect on the cash flow statement. Okay. So that's that part of it. And now what I've done is I've just put in their beginning book value for both the patent and the copyright. And I'm going to put in the amortization, 6,400. And then 25,000. And what the second part of the question is asking, what is it after 3 years? So my ending book value here, 153,600. So this becomes my beginning here, 153,600. Let me know if I make a math mistake. I'm doing this in my head because to pull up a calculator every time, it's kind of a pain. Minus 6,400 here, 146,200. 146,200. 147,200. Thank you. Okay, and then 6,400 would give us something along the lines of, I think, 140,800. So I'm not sure if that's completely correct, but assuming my math is correct there, that's what I would get. Here, math is a little bit easier, 450,000. 450,000, 425,000, 425,000, and 400,000. So if I did my math correctly, the answer to this question would be 400,000 for the patent and 140,800 for the copyright, if I didn't make a math mistake. Okay. Now, it asks, explain how intangible assets have value, and essentially it gives the owner the right to produce or charge for production to earn revenue. That's how I would describe it. Textbook may have a slightly different definition, but that's where the value comes from. They create cash flows. This last one that I want to cover relates to changes in the depreciation schedule. So when there is a change to the depreciation schedule, I see that message and I'll do that while I'm going up. The change is going forward. So the change is made as though it is a new calculation. So let's take a look at the facts and figures here. They use straight line. So we have straight line depreciation from 2008 through 2013. And the formula is 80,000 minus 4,000, which is the salvage value. So you have the 80,000 here and the 4,000 here. And we're going to divide that by 8 years because they had estimated originally it had an 8-year useful life. And so that depreciation was 9,500 per year. So 2008 through 2013 is 6 years. So the accumulated is 9,500 times 6. Which is equal to 57,000. So our book value at the beginning of 2014 equals 80,000 minus the 57,000, which equals 23,000. And so now they've made a change to say to 4 years remaining useful life. And that's going from 8 years to 10 years, of which 6 expired, and 0 salvage value. And so that's information is included up above and to 10 years. So now we just create the new formula, 23,000 minus 0 divided by 4, equals depreciation of 5,750 per year. Okay, so I'll throw up the last poll, and I apologize for going 1 minute over. If you have any questions, click on yes and type it in the chat. If not, click on no. And you are free to go until Friday when I see you. I have office hours until 2 o'clock, so you can always pop in and say hello here on Zoom. Use the same link. Or you can email me and try and schedule another time. I did have a student who had a question that they emailed me, and I'll be happy to help them right after this. But usually I take a little break, and so I come back about 1:10. Okay, so I'm going to end that poll. I'll share the results. And then I'll close it out. And since there were no questions there, I'm going to go ahead and stop the recording.